Okay, so how do you reclaim tax? Well, there's three ways essentially: pension, LISA, and then something called VCTs and EISs, venture capital trusts and enterprise investment schemes. I'm not going to spend too much time on those. Okay, so what are the pension rules? So every individual in the UK can either pay £40,000 a year or their net relevant earnings, which doesn't include dividend income, doesn't include rent income, whichever is the higher. And then we've all got this allowance. If we're non-earners, if we're stay-at-home mums or dads, if we've retired, if we're under 18, everyone has got a £3,600 allowance. Okay. Again, net to you, that's 2,880. Net to you on the 40,000, that's 32,000. You know, the extra is almost free money. Why wouldn't you take advantage of this stuff? As I say, it's a 25% return for basic rate taxpayers, 66% return for high rate taxpayers. May that change in March? There's been rumours for years, but as we sit right now, the system is there. And the great news is with the 40,000, is for those who are earning above 40,000, you can go back through 3 tax years and potentially claim tax back based on previous years, depending on this year's position. Again, seek advice, but something, again, not a lot of people know about. What are your actions in this stage? Well, where possible, if you're on 52, I was with a client yesterday, funny enough, he filled in his forward planning prep sheet and he was a bit nervous about, he's still got a little bit of his mortgage on interest only. So he just wanted to have a chat about, whether he should flip the repayment or what his options to pay back the capital would be in a couple of years' time when he decides to retire. But as we were talking, I said, well, what's your gross now? And he said, I'm on 52,000 now after his pension and his car and stuff. I said, oh, wow, last time we spoke, it was about 47. He said, yeah, I've had a couple of pay rises and I've been given a senior position. So we said, well, actually, you've got 52,000. On that extra 2,000 that's taxable, you're going to pay 40% tax. You currently pay £100 a month to an ISA with us over here. And I just said to my friend, why don't we stop the £100 a month going into the ISA? And now you're a higher taxpayer, put £100 a month into a pension, and you'll actually be getting an extra £25 in tax relief off it. And then through self-assessment tax return, you'll claim another £25 in tax relief back, getting rid of most of that 40%. In fact, I said we should actually try and get that sweet spot to get down to 49,999. He's like, oh yeah, fantastic. So that call, I had a 20-minute call with him when I was walking around Road Park walking my little dog Milo. And we just saved him a lot of tax just by making that change. But we had talked about doing the pension many years ago. We wanted to keep it available, and the 20% wasn't attractive enough. But now at 40%, it suddenly felt much more attractive to him. So just that 20-minute phone call was what was well worth his and my effort, and we put his mind to rest around the mortgage.